Welcome to the Dividend Talk podcast, episode 81, Dividend Growth Investing from a Spanish Perspective. Hey everybody, welcome back to another episode of Dividend Talk. Today we are joined by Javier, who is a Spanish dividend growth investor. He's going to speak a little bit about his journey as an investor and some of the brokers that he uses. Stay tuned and we'll see you on the inside. Hey European DJ, how are you this Friday afternoon?
Thank you, Derek. I'm doing really well. First of all, we have got, of course, an interesting guest on our show. It's the first time we have a Spanish speaker, so I'm really looking forward for that. Other than that, I also had a week off, so I spent a lot of time writing my annual report this week, doing a lot of research. So I'm a bit tired from it now, but I must say I had a lot of personal insights again on how to improve this year. But how about yourself?
Hey, I have to say that the annual report was awesome. It looks like a lot of work went into it, a lot of effort, but it was. I enjoyed reading. It was a great read. So fair play, well done. I'm happy to be here as always. As you said, you've already half introduced our guest. We have our first Spanish citizen here, and that is Javier. How are you, Javier?
Hi there. Hey, thank you very much for having me here. I'm very good. I'm willing to start the conversation.
Awesome. Hey, look, we're both excited to have you here. We've been following you on Twitter for a little while and chatting away, so we're quite excited to talk and get to know you a bit more. And just on that, can you just maybe briefly introduce yourself to our listeners? Just give us a little bit of background, who you are, where you're from, and so on.
Okay, so my name is Javier, and I'm from Spain. That's you already know. And I'm from the south of Spain, from Cali, but I right now live in Cartagena, is in the east of Spain. Um, as you, my guess, I'm here in the podcast because I'm here in the podcast. I like dividend growth investing. I've been in the dividend growth community for a few years now. Not very active in Twitter. Something that I'm planning to start maybe as a 2022 goal. But I have a profile in eToro that we might talk about this later, in which I have been investing and or publicly investing and sharing for a few years, for 2 years now. I have been investing for longer, but I started in the eToro broker 2 years ago, and I think that's all. Maybe the introduction.
Yeah, good. I have to say I'm quite excited to talk a little bit about eToro later on. It's
Mhm.
it's new for me. I've heard of it before, but I've never really heard of anyone discuss it or talk about it. So that would be quite
Yeah,
interesting.
so I see in Twitter because I'm not active in Twitter, but I do have a profile and read and follow many dividend growth investors there.
Right.
And I see that eToro is not a popular broker among dividend growth investors, maybe in Twitter. I see that other brokers are used like the Geo or T212, what which I also use, by the way, because I have broker accounts on those brokers before I started in eToro. But I think that eToro is an interesting broker. I'm happy to talk about it later.
Okay. Cool. So I know you follow the podcast a little bit. So usually we share a little bit of news of the week. Um,
Hmm.
and I don't think it's any surprise what I'm going to start with. We all know Walgreens released their earnings yesterday, and I have to say they did smash it out of the park again. They've done so well. My only concern really is that a lot of this is hyped up by vaccines and COVID tests that they're doing, and we know that's not going to go on forever. But hey, you got to make hay while the sun shines, don't you? And at the moment they're growing quite well. I was quite happy with the results. The retail sales actually went up 10%, which was good. Their international sales have gone up due to that German wholesale joint venture that they have with McKesson. Boots.com. I don't know if they have Boots in Spain, but I know they do here in Ireland. And that just continues to grow and grow. So quite a solid start to the year, and a happy investor here.
We don't have working boots in Spain, but I've read in the news as well, and I agree with you that those have been very good results and earnings. And I was surprised that the price actually dropped after the earnings release.
Yeah, I think the price dropped because if you look, they gave some concerns or what could impact them, and I think there's rising costs. So they're struggling to meet the labor demands, and then to obviously meet the labor demands, they have to pay people more, which obviously costs a lot more money. So I think that had a huge reason behind the drop in price. But
yeah, maybe also the U.S. government is planning to issue free COVID tests to American citizens, and that's a big share of the working boots business. So maybe investors are afraid that the company loses earnings due to those free COVID being like distributed in the United States.
Yeah. No, I was thinking to say, well, I mean, as I said previously, vaccines and COVID can't go on forever. So it will have to drop off or taper off.
It's still a good company, though, I think.
Yeah. And European DJI, what have you found for us this week?
Well, I found actually quite funny that there was quite some hype on the internet. I even heard it in my social circle, people talking about how much Tim Cook earned last year, because he earned around $100 million last year. And I found it interesting because there's always this kind of like, oh, CEOs earn too much. And I generally agree with that if you look at their performance and track record. But if there's one person that deserves to earn even 10 times more, then it's Tim Cook. But what I find even more interesting that nobody talks about is because I did a back on the napkin calculation. And for instance, Warren Buffett just last year alone in dividends received around $130 million. So even 30% more than Tim Cook, just via the holdings of Berkshire in Apple, and then his share in Berkshire again. So for me, this is really funny, like how these two big guys are earning lots of money. But I see the one as Buffett really laughing the hardest, because he's just sitting at home and reading annual reports for fun and still earning more than the best performing company CEO in the world.
That is why we're dividend growth investors. We don't
exactly.
We don't want to do the work. We just want to make the money.
Yeah, we want others to do the work.
Exactly. Thank you, Tim. Thank you, Tim Cook. And that's an awesome story. And he only earned 3 million. I say only, but he only earned 3 million as his base salary. The rest is bonuses and shares and stocks. And
yeah. And then imagine Buffett, no salary at all from them.
Yeah. So Tim had a 3 million head start on him.
Exactly. Even though.
Okay. Awesome. Okay, so what we might do, actually, we do this for a bit of fun, Javier, just to get to know you and just to lighten up. But we do this rapid fire round. Okay. It's quite easy. We'll ask you 5 questions. It'll be like apples or oranges, and you just have to answer which one you think straight away. And if you want to clarify anything at the end, feel free. Okay. So I will ask you the 5 questions, and the first one is: Barcelona or Real Madrid?
Real Madrid, obviously.
Okay. Estrella or San Miguel?
Estrella.
Okay. Apple or Microsoft?
Apple.
Okay. Bitcoin or Palantir?
Bitcoin.
Okay. And the last one is Buffett or Munger?
Buffett.
Honestly, I think I'd agree with all of those.
Yeah, where is the questions for me? I was afraid there were a hardest question to answer.
But we try keep them easy.
No, yes.
Can you
It's
clarify your answer on
yeah,
Bitcoin
sure.
versus Palantir?
No, and it was easy because I don't know. I'm not very into the crypto world, so I don't know Palantir. I know Bitcoin because it's like the best known cryptocurrency. I
Mhm.
think. I actually know Bitcoin and Ethereum, and not very much. So if I had to choose between Bitcoin or Palantir, as I don't know anything about Palantir, I will
Yeah,
go
makes
with Bitcoin.
You sound like a real dividend growth investor, so that's good to hear.
Yeah.
Okay, so on that note, then we might just start kicking off with a few questions. And the first question for me is, how did you become a dividend growth investor?
It's a long story, I think, because when I started investing, I didn't start with dividend growth stocks. I started like the easy way, I would say. I started investing in mutual funds, index mutual funds. Um, I kept reading books about investing. I wanted to make my own stock picks. I wanted to be more active in investing. I have always liked like the business and the management world. I like to go into financial statements and business strategy. So I wanted to be more active in investing. And after I read a few books, I made my first picks that didn't go well, actually, the first of those. And I realized after that that something was missing for me. Like I had chosen the stocks based not based in dividend, but in other factors, and I missed something that I miss seeing like the profit of those stocks in my account. I miss the dividend. So I started to research and to learn about dividends and about dividend stocks. I reached the dividend aristocrats in the US, and I discovered some European dividend companies that I like, and I decided to go ahead and build my own dividend portfolio. That I wanted to be an international dividend portfolio with some bias for European stocks and for American stocks, because I feel like are the best stocks, or maybe the ones that have been paying dividends for a longer time. So
Yeah.
but I still wanted to have some international stocks, not European, not American, and here I am. I have been a few years with the portfolio.
So you mentioned then that you started by reading books. Do you know
Mhm.
which books you started to read?
Yeah, so I remember a few. I have read many, but the ones that I remember most because were the best ones for me. It was the four pillars of investing. I think that is called in English. The four pillars of investing by Bernstein, um, and also stocks for the long run. That's a very good book. And in that book, actually, I learned that dividend stocks, and historically, dividend stocks have returned better profits, or have returned more profit than not dividend stocks historically in the broad market. And so I found that fact very interesting for to focusing in stocks, but in dividend stocks. But I focus on dividend stocks not only for that fact, like better profits or more return, but also for the psychological fact that I like to see the dividend coming into my account. Something that people usually say that it's a silly thing, or something stupid, but I really think that is something important, because psychology is a big share in the returns in investing.
Yeah, I agree, because we spoke about this. We've had a few guests on here that have spoke about growth investing or value
Mhm.
investing, and it's a different psychological edge. Like
Yeah.
your mind has to be tuned in. But I'm exactly like you. I prefer to see, I prefer to have the money in my hand than looking at it. So I
Yeah.
completely agree. Now, I know you're from Spain, so like in Ireland, the dividend culture here is not quite there. Okay, but what's it like over in Spain? Is there a lot of dividend investors? Is it accepted, or is it is it something that not a
No,
lot of investors
I
do?
I think that in Spain is not dividend growth is not a popular investing strategy. And actually, it was hard for me at first to start dividend growth investing because anyone I could ask, and like from my friends or from people that I know that knew about investing, and when I to them about asked them about dividend dividend investing, they told me like two things. The first is that it's not a tax efficient strategy in Spain. We can talk about taxes in Spain in dividend growth in dividend investing. And the second one is that the popular stocks like Amazon or maybe Tesla, they do not pay dividends. So they think people usually think that it's not a good dividend. Dividend growth is not a good strategy. But still, I think that the dividend growth in community in Spain is growing now, and I have found some profiles and some people that uh, they they are interested in dividend growth investing. Still not a common strategy.
That's quite interesting because if we look at our followers and just in general, when we look in Twitter, there's a really huge Spanish community. But I guess compared to the population size, I can imagine what you mean with that, of course. So tell us then a little bit, like, what is it with the tax situation in Spain when we think about dividend investing?
Okay, so the thing in Spain is that dividends or dividends received are taxed between 19 and 21%. Dividends coming from Spanish companies.
Hmm.
When dividends come from international companies or from foreign stocks, those dividends have a withholding tax, the tax in origin, and then they are taxed in Spain with the 19 to 21, depending on how much dividend you received during the year. 19, 21% of the remaining dividend. Still, Spain has double tax agreements with many countries. I think that Ireland and Poland are the same, but Spain has double tax agreements with the United States and with all European countries. And up to the Spanish government gives back up to 15% of the withholding tax. So when the withholding tax is 15% or less, it's like only being taxed in Spain with the 19 to 21%. But the main difference is, or the main problem is that mutual funds in Spain have a good treatment, a good tax treatment. So funds, the shares in mutual funds can be transferred from one fund to another without paying any tax for the gains for the profits. That's something that you cannot do with a stock. For example, you cannot transfer your funds from Apple to Microsoft without selling and actually paying from the gains for the gains or for the profit. With the mutual fund, you can do that, and that's one of the reasons that I think that many Spanish investors like mutual funds rather than individual stocks.
Oh, that's quite something. Did you say then that it's 19% on top of the withholding tax, or is it you pay the withholding tax, and it's the remainder of the 19%.
The remainder. So you pay
Ah,
withholding tax, the withholding tax, and the remaining cash of the dividend is taxed between 19 to 21%. But if there is a double tax agreement, that 15% is given back to you, not actually given back, but is given back in form of a tax credit, so
yeah.
that the Spanish government only charges you the remaining quantity up to the 19%.
Okay, and if you sell a stock and you have capital appreciation, do you have capital gains tax on companies?
Yeah, so you had to pay for dividends received and for capital gains.
And what's the percentage for capital gains?
It's the same. Is
okay.
between 19 to 21%, depending on the total amount that you have that year.
Okay, so you're still cheaper. It's still cheaper than Ireland.
In Ireland, how much is it in Ireland?
Capital gains is 33%, and dividend income is taxed at your marginal rate. So we've got two bands. We've got 20, I think it's 21% and a 40%.
I see.
So you're taxed at either one depending on what wage cap you're in.
Okay.
But Javier, it also means then that to your point that it's I said also more interesting, I guess, for Spanish investors to invest in stocks in Spain, listed in Spain, right? Also from a dividend stock point of view, because of the hassle of claiming back dividend taxes and everything. What are some popular dividend stocks in Spain to invest in?
So there are actually in Spain. I don't think that there are many, or it's not the most common strategy, investing strategy, the dividend strategy. But the companies here usually pay dividends. There are many companies that pay dividends and actually high yields, but there are not very good companies, dividend growth companies. Are companies that pay dividends, but not dividend growth companies, not like as I like to see it. Popular dividend companies, I would say actually Enagas and Red Electrica. Those are two companies that I think that maybe Derek, you have it in your portfolio, and a European dividend growth investor had them in the Nobel 30 index, but I think that he had them removed because
Yeah, Red Electrica is out because they did a 5-cent dividend cut last
yes,
year.
but Red Electrica,
yeah.
right? But Enagas didn't include it, right?
Not yet.
No.
I think
No.
they are like 1 year short or something like that
Yeah.
to get in there.
Yeah, so those are very, very popular because those are the companies with the longest history in dividend distribution. I actually had them in my portfolio until a few months ago that I sold them because I wasn't sure about their ability to maintain the dividend. And actually, Red Electrica cut the dividend soon afterward. Those are I think that are the most known dividend companies, Red Electrica and Enagas.
Okay, and is there any unknown crown jewels that we should consider looking for?
If I can say one, I still have to do my work on this one because I'm currently researching it, and is Viscofan, ticker is VIS. It's a company that manufactures casings for meat, like to store the meat. And so
Yeah.
Viscofan manufactures the casings for meat. It's actually one of the main players in that business. It's been distributing dividends for a long time. It had a dividend cut, like I think that in 2011 or 2010. But I think it's a good company. It has good margins, and it has a business niche, and maybe an interesting pick.
You're believe it or not, that's the second time today someone from Spain has mentioned that company to us.
Oh, really? Yeah.
Yeah. It came up in one of our chats, literally a couple of hours ago. It's the first time I've heard of them. I know you mentioned them, so they must be
I'm,
good.
as I say, I'm going through researching. I'm researching this company right now. I haven't finished yet, so I cannot make a final statement. But I think that is good to give it a chance to maybe study it deeper.
Yeah. They look like they have a nice dividend history. That's all I say.
Yeah.
From 2011 to 2020 anyway.
Yes.
So this then also maybe a nice time now to start to talk a little bit about investing in eToro and such. Can you explain a little bit more about it? Because like you mentioned in the beginning, I think Derek and myself, we have accounts at the Hero, Interactive Brokers, Trading 212. And eToro indeed is a little unknown. I actually have an allergy from it, just from all the YouTube commercials where I see a guy kicking a ball up that I think like he is so not a football player that I don't even want to associate myself with the broker, but maybe I'm just too biased in it. So tell us a bit more about it, and why do you like it so much?
I mean, I can understand you because I used to feel the same. All right, I was constantly watching all the YouTube ads, and I thought that it was a broker only for maybe for crypto or for trading, for short term trading. And a friend told me about investing in stocks in eToro 0% fee. That it only has like a small spread, and I decided to give it a try. What I see, what I saw. Um, I built a portfolio there, like the same portfolio that I have in other brokers, because as I have said, I've been in the dividend growth in world investing for before I started in eToro, so I also use the Giro and trading 212. I built the same portfolio in eToro, and I've been there since then. I can say one thing that is good and one thing that is bad or not that good in eToro. The thing that I think is good is that there the fees are very low. It's just a small spread, no fees for investing in stocks. Um, and you also have a broad market, many stocks to invest from many different countries. You can invest in American stocks and almost every European stock, also Chinese stocks. You have many stocks to choose. The social trading there is very good in eToro. You can share what you want, what you think about different companies, and read what other investors think about the companies. Is all about sharing and discuss. It's a very good thing. What I don't like about eToro so far is that they do not have the W8 being formed so that US stocks are charged the dividends from those for American stocks are taxed 30% instead 15% as in other brokers. So that is a problem. That is a problem. Well, and I have to say that I think that the Toro team is working on it, because my other thing that I like about eToro is that it's like a new broker, but that is constantly improving and make hearing like the suggestions that investors make to the team, and they try to apply them and to improve the platform. I hope that they address this problem of the double tax agreement in the near term. That's though it's a negative point so far.
Yeah, when I think of eToro, first of all, I see it more as a social platform, and you can correct me, but I always get the feeling that it's for a casual investor, or like you said, maybe it gives me the feeling not for the long term. But what concerns me is my money safe there? And that's probably the first question I ask. So when I
Yeah.
when I invest in the hero, I know I have a certain amount of protection, and the same in interactive brokers. With
Mhm.
eToro, and I've tried to look them up a little bit. I know they are registered and regulated in Cyprus and Australia, but I'm not sure what protection I have in terms of my money in there.
Yeah, I mean, I think that you have the same protection that you have in the Geo, in actually in interactive broker right now, because I think that the total amount protected is 20,000 euro, right? And in eToro is the
Yeah,
same. eToro is regulated not only. I understand you, because I had the same like questions and doubts at first. Um, it's not only regulated in Chipre. Where did you say that? It's regulated in Chipre, and also in by the
Aus-
FCA
yeah,
in the
Australia.
UK, and in Australia as well. And recently, it's been approved in the US as well. So I think that this like a global broker is very well regulated, and in my opinion is well protected. I wouldn't invest money there if I felt that it wasn't sure. But I really think that it's a safe platform. Um, it has also a very big community that gives me like confidence as well. Mm, I I don't know. I feel safe, really.
Okay. And who do you follow other traders, or are you
Yeah.
an influencer and people follow you?
Yeah, so I do both things, and both things. I follow people there in eToro. I learned from many different investors, and I also started to share my dividend growth strategy. Like how do I see investing, and how do I pick my stocks? And some people started to follow me. So right now I'm what is called in eToro a popular investor. Is said to an investor that has some people that follow him, and some people that copy their investments. So right now, I have some people that are copying my portfolio. So every trade that I do, they have the same trade done in their account. That's a very interesting feature in eToro that I don't think that any other broker have.
Yeah.
uh, Trading 212 have something similar with the buys. I also have my pie built in there in trading 212, but it's like the thing is that when you invest in eToro, you invest more in the person.
Yeah.
And when you copy in eToro, you copy the person, and when you copy in trading 212, you copy the portfolio, right? The pie, right?
Yeah.
That's the
So
difference.
so knowing then that you are a popular investor, does that add pressure, knowing that when you buy something on eToro that it's going to affect, I don't know how many, but just say many different people? Does that play a part when you're making a purchase
Mm,
there? Because
I
because
mean,
because
um,
honestly, I would struggle with that.
yeah. I mean, I'm very straight with with my followers or with my profile. Everything is like open. You can followers and eToro users can see everything. They can see the trades that I do. They can see my returns over time. They can choose open a copy and close it whenever they want. So I try to be very clear with my strategy, where with the companies that I like, the companies that I have under the radar, and how do I build my portfolio. I just do what I do, like what what I feel that is better. I do not think like people can choose to leave me whenever they want. I try to just do good good trades and buy good companies. I don't do many trades. I am a long-term investor, so use a few ones, maybe during the year, and just collect dividends. No more.
From that point of view, then, Javier, what have been your, the investments that you're most proud of that you've maybe done in the last 1-2 years?
Mm, the, I can say my two last incorporations to the portfolio that are Row Price,
Yep.
T Row Price. It's a company that I didn't know much, but after I went through it and researched it a little bit, I found it a very interesting company, good margins, good returns, good dividend, and it's a dividend aristocrat. Mm, it was a hidden gem for me. And the second is the Royal Bank of Canada. I like it because it's also a good dividend company with a good moat and good returns, and is a way also to diversify my portfolio from American and European stocks. A Canadian stocks still has a big share of its business in the United States, but I found it also interesting. I do not follow like the constantly if the price is up or down. I just keep receiving dividends if I'm monitoring the companies, and if everything is right and doesn't anything changes, I keep with them in the portfolio.
Good. And maybe we might finish up with one last question, and that would be: have you got any advice for beginner investors into dividend growth investing?
Yeah, so I would say not to maybe not to rush. Just read and learn, and ask people, and once they have learned, to start to give the first steps, not to keep or like, get stuck in the reading or in the reading thing, like or maybe waiting for the best time to invest. I would say that is better timing the market than market timing, right?
Yep.
I will also tell them that do not hear people that say that dividend investing is not worth it, or that there are more profitable ways to invest. I think that there is not a better way to invest than other. Just each person has like a personality, and that personality matches like a investing style, and each of us has like a different style that is better for us. As I have said, psychology plays a big role in our returns, and if we do not choose the right investing strategy for us, it won't be good for money. So don't hear the noise. Don't hear people like saying that growth, value, crypto is better. If you feel like dividend is good for you, go stick to it and stick to the strategy and keep collecting dividends. That is what I like to say.
Good. Some good advice there. I have to say that I will share your profile on eToro, if that's okay. I think you do some really nice posts, and I've been going through them, so I think
Okay.
people should check you out. But thanks a million for that. That was quite interesting for me, and a new perspective and a new broker to look at.
Okay, perfect.
Okay, we might jump on to some of our listeners' questions. So listeners will write in, and we'll try our best to answer them. And the first one is from Rafa, and he has asked you in particular, what's your favorite Spanish stock that you own in your portfolio?
Okay, that's easy because right now I only own one stock, a Spanish stock in my portfolio. and is Inditex. Inditex is, I think, the biggest retail company in worldwide.
Yeah.
It has a long history of dividends. It had a dividend cut like during the pandemic. The company had the dividend, its dividend cut just to keep enough cash reserves, but still it's a good company, has good margins, and is back on track distributing dividends. I'm very confident with the company, and I plan to keep it for the long term.
Good. Good. I'm familiar with that company because Phil, who is a regular listener, wrote a blog post for me on Inditex before. So it's a company I've been watching, but like you said, they did cut their dividends, so
Yeah,
I
they do.
I stayed away. The next question is from Reasonable Yield, and he has asked us, I'd like to know how you feel about balancing potential for capital appreciation versus just yield. So, example, buying AT&T only to underperform on a total return basis.
Yeah, so I like to say that I buy companies with a good dividend growth history, or yes, with a good dividend track record, but I do not buy them because of the dividend. I think that the dividend is a consequence of a good business. So if you, I will never buy a company for only for a high yield. Like in this case, I don't like AT and AT, so it's easy for me. Even though it has a high yield, I will never buy it because I feel that it's not a good business. And on the contrary, if I found like a good business with a low yield, maybe for example Apple, I will consider to buy it. I still had to make some research and to decide if the dividend is too low for me. But I would rather buy a good company with a low dividend than a bad company with a high dividend yield.
Cool. Future Dividends has asked us then, how much planning goes into investing in 2022? Do you plan to invest a certain amount monthly, and is there flexibility there?
Yeah, I have I have my a clear plan, and I invest. I have a monthly savings for my salary, and those monthly savings go straight to my portfolio and to my whole portfolio. I have my total portfolio. I also have portfolios in other accounts. As I have said, I distribute that amount among my whole portfolio, and that's every month the same. And pay me first, as is usually said in the investing world.
And what is your savings rate so far?
My saving rates is close to 50%.
Wow.
Wow.
Good job.
Okay.
Good job.
Not many expenses for so far. Like I not married. I don't know have children, so is is easy, right?
Well, it depends, right? If your future wife also has a job, then maybe there's even more potential for savings. So
Yeah,
it all depends.
yeah. So I have problem this year. That's true. Is that I'm right now planning a wedding, and that's a big expense to face, right? But I still have the budget done. I expect to be able to keep my saving rate overall during the year.
Okay. Well, if you doubt, send her to us. We'll do some selection to see if she's really a saving rate. I said material for you.
Yeah.
Okay. Martin has asked us about his core satellite investing strategy. He already has 15% position in S&P 500. He wants 60% and then he wants to invest the rest in some high quality dividend payers like Johnson Johnson, Texas Instruments, and then he wants to add 3 more ETFs with a historical growth rate of 7%. So he just wants to know what we think of that, really.
Yeah.
I think we've got something similar before, where someone had a similar setup, and I mean, I personally don't see anything quite wrong with it.
No.
I like it quite a lot. I've been chatting with Martijn in the past a little bit. I think what he's trying to do is just really to have a fundament in something where you don't need to look after. You know that if you have individual stocks, you need to do more maintenance, more management. And if he has it in the core of a few indexes or a really large index, I think it really allows you to sleep well at night, right? And just contributing on a monthly basis will do most of the job for you.
Yeah, and here's the thing: not everybody likes to read annual reports or and so on. So for the majority of people, this would probably work just as well as what we do. Centrino has asked us, what was your highest yield stock paying in December? Mine is easy. Enagas. That was an easy one for me.
I guess in my case was I had two companies yielding about the same. One was Unilever in early December, and the second one is CLP Holdings, is a utility company in China, around 4% as well.
I think mine was Royal Dutch Shell.
Cool. And then a couple more questions. So just wondering how your brokerage fees and which brokerage you both use. He lives in Estonia and he has pretty high fees in local banks. I know we spoke about eToro has 0 fees. Trading 212 has 0 fees. And I use Interactive Brokers and the Giro, which are pretty low fees. But I'm not sure what the fees are like if you live in Estonia. That's the only.
Well, the question is if he has access to those, right? Because generally those are low-cost brokers. So if he has access to any of those brokers, I'm sure that Estonia will also get a good deal out of it.
Yeah, they're the main ones that I think we all use.
Yep.
Nick Scott has asked us, how will your strategies change as you approach a freedom date?
Oh, that's a very interesting one. If I would only know. So my strategy is there to actually push all the money in there every month, and I need it until the finish line, right? Although, of course, I get less dependent on the savings rate as soon as the dividends are higher. I don't think I would change too much. It's rather a question: what will I do with my strategy after I have this ultimate freedom, right? Will I continue working or not? So I don't think it would change at all, but ask me again in 4 or 5 years when I'm closer.
I mean, you're closer than me, so you have you'll reach that point well before I will. Do you know what? It's a good question because at the moment you're focusing on increasing your dividend income, and you get to a certain point where you've reached your goal and now you want to live off that income, and it's not going to grow as much anymore, because I assume maybe you won't work or you're working less and you're going to be extracting that income out, and it'll be a bit of a change psychologically, I think.
Yeah, I've read on many blogs of people that reached retirement, that it wasn't what they expected. Yeah, that they didn't know how to deal with themselves being suddenly alone, all their social contacts still at work, and what do you do then? You're with the grannies in the supermarket during the day. So I think I will definitely have a lot of adjustment, and how you said, kind of former drug addict kind of feelings, like you really need to kick off from this stuff.
Yeah. And how about you, Javier? Have you thought a little bit about what you would do if you ever reach that freedom?
So okay, we all invest for that, right? We all are expecting to that day in which dividends cover our expenses. That is my final goal. And I have not thought what I will do. I don't know if I will quit working. I enjoy my work, my job. So I just think on it like something that I enjoy. The like the path I enjoy in the path, building my portfolio, sharing it, like discussing, research the company is something that I enjoy. And once I reach the point, I will find out what I want to do. But I think the question was about adjustments in the portfolio. And if I
Yeah.
had to say one, not necessarily, but right now, I do not worry too much about low yield, high growth versus high yield, low growth companies. I have a mix of them in the portfolio, but maybe as the retirement date or the financial freedom date uh, comes, I might bias or have a preference for higher yielding stocks and rather than for low yield, high growth stocks like Apple or Microsoft, for example, versus some higher yield stocks like Unilever or um, GSK, for example.
Okay, good. And then the last question comes from SLINT, and he loves our podcast, which is great. But he says he never hears us discussing business development companies, BDC companies like ticker MAIN. What's your take on them?
So actually, I know it's not on the podcast, but I made a video once about monthly paying stocks, and Main is one of them, and it's indeed a business development company. You know, the issue is why I'm not such a big fan of it. So, truth to be told, they are usually high yielding stocks, but you depend so much on management, and usually those are also small firms, and I don't feel comfortable with business development companies in general for that sole reason that it's hard to grasp them. It's hard to really get a feeling for management. And if I can't understand the company or get a good feeling with it, I rather pass on them. So I have studied business development companies in the past because they are having often really attractive yields, but that's actually just the reason. Too complex for me to understand.
Yeah, and me too. I will say that there's a guy on YouTube, Dividend Bull, I think his name is, who analyzes all these types of companies, and he's pretty popular, and seems pretty good. So he'd be worth checking out.
I agree with you with the both of you. And like, I haven't gone through those companies very much, so I cannot give like a good opinion about them.
Okay. Okay, that's all the questions. Thanks to everyone for your questions as usual. Usually we do a stock pick of the week, maybe at this point. So if you were to pick one company in your portfolio that you had to recommend right now, Javier, which company would it be and why?
Okay, so if I had to choose just one company for dividend investing, I I have a clear choice, and it's Realty Income. It's a REIT company with like nearly 6,000 properties around United States. It's now expanding to Europe. It has bought some properties in Spain as well, and it calls itself the dividend company. It has been paying monthly dividends, growing dividends for more than 25 years. So I find it like a great company with like properties rented to high quality tenants and among different industries. So I think that is a business that is diversified itself, and it pays a very good dividend monthly. That is an uncommon thing. It's the stock that I would recommend if I had to choose just one.
Awesome. I don't think anybody here will argue with that choice. Nice pick. Okay. So with that, that's the end of our show. It's been a pleasure having you on, Javier. It was great to hear your story. And as I mentioned, a new broker, a new perspective to dividend growth investing. So thank you very much for joining us both here.
Yeah, great to be here. It's been a pleasure. Nice to be here with you, both of you guys.
Thank you.
Okay, and we'll see all our listeners this time next week.